Hello, everybody. We are brought to you today by Routine. When you sleep, you lose between a pound and a pound and a half of water, mainly from expelling vapors and sweating. What do you do first thing in the morning? Well, most people wake up, don't drink water, and they go straight for the caffeine. They drink coffee, and by doing so, you actually dehydrate yourself even more. So, Morning Routine is a product that contains half an organic lemon, 1 tablespoon of apple cider vinegar, Himalayan sea salt, all 6 essential electrolytes, and most importantly, no sugar. They come in these little single serve packets, and they are part of every single morning for me. When I wake up, the first thing I do is grab my shaker bottle, pour one of these little single serve packets in, shake it up, and drink it. Genuinely, the days I use Morning Routine versus the days I don't, the days I do, I truthfully feel hydrated. I feel like my brain is just working in a way that it doesn't on days that I don't start my day off with one of these. Routine, trusted ingredients, made convenient. If you go to yourroutine.com and use code ShaneWhite30 at checkout, you'll get 30% off your first order. Again, this is just a daily morning supplement that I take. And a little hack for everyone listening too, I take these first thing in the morning. Sometimes when I feel just dehydrated, or maybe if you decide to have an alcoholic beverage, they're also great, in my opinion, after if you have a drink, having one of these afterwards before you go to bed to rehydrate. Just any part of your day, you can plug one of these in just to rehydrate yourself and get going. And like I said, go to yourroutine.com and use code ShaneWhite30 at checkout for 30% off your first order. Today, we're also brought to you by NeuroRoast. Today's episode is brought to you by NeuroRoast, a company that's dedicated to helping you optimize your brain function and overall well-being. NeuroRoast's flagship product is their premium mushroom coffee, which is made with an organic single origin coffee and their signature blend of 5 different functional mushrooms, including cordyceps, lion's mane, reishi, turkey tail, and chaga. Mushroom coffee is a new and exciting way to supercharge your day. Unlike regular coffee, which can cause jitters and crashes, mushroom coffee provides a more balanced and sustained energy boost, allowing you to stay focused and productive throughout the day. And with NeuroRoast ground and instant coffee options, you can enjoy the benefits of mushroom coffee wherever and whenever you need it. And here's some great news for my listeners today. NeuroRoast is offering an exclusive discount just for you. If you use the code Shane White during checkout at neuroroast.com, that's NEUROAST.com, you'll get 30% off your order. Whether you choose ground or instant coffee, both will work. So again, that's Shane White at checkout for 30% off your purchase. So if you're looking for a natural and delicious way to boost your focus, memory, and overall cognitive function, give NeuroRoast mushroom coffee a try. With their commitment to quality and sustainability, you can trust that you're getting the best possible coffee for your brain and your body. And one last time, use that code Shane White at checkout to get 30%. That is the prompt they gave me. Love the guys at NeuroRoast. Genuinely, folks, from me to you, their coffee is delicious. It does honestly have a different sort of caffeination way of it. The best way to describe it is it doesn't give you the jitters or the crash. I love their stuff. I get the flavored mushroom coffee, ground coffee. To be honest, it's one of my favorite afternoon coffee products. If I'm going to have a cup of coffee for some reason in the afternoon, whether it's a long, busy day, whatever it may be, I love taking their stuff because it really doesn't give you this like jittery, super elevated, caffeinated feeling, but you feel like you have energy and you don't have the crash later. So genuinely do love NeuroRoast. Again, their website is NEUROAST.com and the code is Shane White. All right, everybody. Thanks for listening today. The episode is up after this. All right, everybody. Welcome to another episode of the Shane White Show. Before we even dive in and introduce my friend Danny here, there's been a little bit of a hiatus. And Danny, I didn't tell you this before we started recording. Me and my wife just bought a house and went through that whole process. And this podcast, unfortunately, took a little bit of a hiatus. So it's been a month since I've recorded an episode, which for me is a really long time. So Danny is my first guest back on the podcast. So without further ado, Danny Baylis, my good buddy, is back on the podcast. Danny, how are you, buddy?
Doing well. I knew I was going to be on the podcast today, so I got my full focus planner that
My
I
man. Are you
used
back
this
on it?
morning. I'm back on it. I'm
Are
back
you?
on it.
Okay, good. I got Kyle. Kyle uses it. I don't think he uses it he doesn't use it the right way, but he uses it every day.
And I think main reason why I use it is call it transitioning from to-do lists to focus areas. And that's in a nutshell. Like at one point I have, 15, 20 to-do lists on any given day. And it's like, okay, well, what are my three main priorities that I truly need to get accomplished today? And then how am I tracking towards that? So I'm back on.
Love it.
I didn't do lunges today, so I
did not do lunges
for that. But I got my workout in.
I'll give you a check mark. That's going to start to become maybe when we do more in-person podcasts, now that I'm in my permanent place, that'll be a requirement. We have to do lunges before we record an episode. I'm pumped to hear that, though. Before we even dive into real estate and everything else, the full focus planner, it's something that I use religiously, but I also have seasons where I try technology again, and I try other tools, and I always fall back to it. And a good story is, I think we talked about this a long time ago, bullet journaling. That was like another thing I was dancing around with when you showed me you're the one that showed me the full focus planner. Just to give you a little shout out, you're the reason I started using it. So thank you for that. I started using the bullet journal 2 days ago. I was like, I kind of want to start bullet journaling again. If I can start doing it. And then I'm like, no, I need my full focus planner. Like, I get so disorganized without having a very clear and defined list now. So,
and I think what full focus planner does is at least it helps me work backwards. Like I get too in the flow of like, what am I doing today? What am I doing this week? What am I doing? As opposed to really taking a step back and, okay, what am I trying to accomplish this quarter? What am I trying to accomplish this year?
Yes.
Are my actions turning into who I want to be in 3 years from now? So I think that's what it is. It's a reset of like, and you and I had talked about it too. Hey, you got to find a way to get Rob Dyrdek on this podcast.
Funny story. Yeah. Oh, no, I think I told you this. Well,
okay.
Yeah.
Is my time, equating to what I'm trying to accomplish. And that's really how I leverage a focus planner. And it helps me, again, just kind of think big picture as opposed to to-do list, so to say.
100%. There's something to be said about just the simple flow of it. For me, like always opening it up and seeing what my yearly goals are on the first page is powerful. Because I think otherwise, if I have it on like an Excel sheet or written down somewhere else, it's very easy to start just doing whatever you feel like the fire drill is versus like aligning on that. And then for me, I don't know about you, I don't use every part of this, but I use the weekly preview every Sunday. That's like my religion.
Yeah, I'm not spending an hour on Sunday, but I am, call it, getting ready for the week on Sunday in some capacity, leveraging the journal.
I love making a weekly big three because that helps me just like, am I on track for goals or not? And then like, what's a big thing a big piece of the pie that I could just like over the week try to accomplish? I don't know about you, but like sometimes it's something for Noble that's very specific, like doing X, Y, and Z. But I actually use it a lot too for like health and wellness. Like the other week, I felt like I kind of got back into having a few drinks here and there. And it was even just like no drinks during the week. And I had like Monday through Friday, and I had to like check off each day. And it was just like a little something that could have been, it's just like a reminder in the back of my head that like at the end of the week, I got to fill that out. And was I accountable to what I wanted to do the week before? So anyway,
I think, I live my life. It's really 5 F's. It's faith, family, fitness, finance, and friends. So again, it's like if I'm trying to make decisions that fill up those buckets in some capacity, and I leverage this for work, for real estate, but also like, am I intentionally, spending time with my wife? Am I intentionally spending time with my son?
Yeah.
Am I doing cardio, which I don't do enough of? So
okay.
that's kind of how I take it past just call it work related as well.
Yeah, yeah. Well, I'm pumped you're back into it. I know for me, when I use it, when it's my day in and day out tool to keep me on track. Amazing things have happened. When did you
Yep.
show me that? Probably
It
2019,
was a couple of
2020.
years ago.
I mean, it was. I have to look. I have a shelf in this closet that's just my full focus
Okay.
planners, and it's,
Oh,
dude.
wow.
I bet I have 15 of them in there because it's by quarter. So I've been
Well,
doing it for at least. You know what's funny? I know I started using it religiously Q1 of 2021 when we started Noble. So that's
okay.
I've used it every quarter since then because I have an annual plan now with them. I just get 4 shipped
Yeah.
to me a year.
And, again, on that, I know we talked about what the Vivid Vision.
Yep, yep. It's
I'm
another good
reading
one.
that. That's my December book to kind of spring load things for 2024 for me, for my real estate investing, for, kind of those 5 F's as well. So,
Love that. Love that. Well,
yeah.
let's dive in some of that, Danny. For everyone listening, we kind of jumped right in. I love jumping in the full focus planner number one, but would you mind, for people who don't know who you are, or maybe didn't listen to the first podcast, just to give everyone a little bit of a background of who you are and what you do, and then obviously we'll dive into real estate and all the fun stuff we want to talk about.
Yeah, definitely. So I guess to start off, it's always like who you are. Like, and we always go into like, oh, I'm in tech sales and I do real estate.
That's
So
why
I'd say,
I like to say, I didn't want to say who do you work for or
right.
what do you do, because I want to know who you are. Like, who's Danny?
Exactly, exactly. So I'm a father of a little guy, Braden, who's 14 months old. I'm a husband to my wife of 2 years now. I live in the west suburbs of Illinois in Geneva. If anyone on here ever wants to golf this summer, let's would love to do that. And my day job is W-2 technology worker at Palo Alto Networks, and to me, it's a fantastic platform, fantastic opportunity, and really, my passion is real estate, and I think where this stems from is I fundamentally believe that a large portion of your active income should be on trying to build passive income. And that's really where things started for me is, okay, what am I doing with this active income to grow my passive income? And logically, about 6 or 7 years ago, that was real estate for me. So I started off fixing and flipping homes throughout Chicagoland area, and I quickly found that for me, at least, it was a very active role. And again, while I have a family, while I have other interests, while I have a day job, that didn't work for me in my situation. So, fast forward 3, 4 years, I pivoted into multifamily real estate. And to me, why multifamily real estate makes sense is it's economies of scale. It's more of a business model of implementing systems and processes, how I'm really orientated, and then getting the right team in place to essentially treat each property like its own business and continue to really scale. Sky's the limit of the types of opportunities that we're going after, the size of opportunities, and kind of bringing all the pieces of the puzzle together for multifamily real estate investing.
Wild. What I always wonder, I don't know if I've ever asked you this question. What was the jumping off point to even do your first investment back way when you did the flipping? Like what was it? Did you listen to something? Did you read something? Like, where
It
was it, Danny, where you
was
kind of were like, I want to try
some
this?
book, some book that really changed my life. It was the last thing that you want to do is climb a mountaintop and get to the top of the mountain and realize that you're on the wrong mountaintop. So I've always had that passion for real estate. Many people will reference the book Rich Dad, Poor Dad.
Oh yeah,
I
love that.
read that as well. And to me, it was I. There are many people out there doing things that they aren't necessarily more capable, more skilled than you. They just took that calculated risk. And I'm 32 years old now. I'm have a handful of properties that I own as a general partner, as well as a limited partner. We could go into that a little later, but it's the power of starting. It's the power of sometimes asking, what is the worst case possible situation that could go wrong? And to me, I leverage my faith of choosing faith over fear, courage over comfort, two analogies that I kind of stick with. And that's really what, steamheaded me to start my real estate journey a handful of years ago now.
Love that. Love that. Yeah, I mean it's 0 to 1, right? It's the whole concept of going 0 to 1 and giving it a shot. So for
Yeah.
you, you did obviously. I think we talked about this on the first podcast. Actually, you did the flipping, buying and trying to flip real estate for single family
Yeah.
homes. Didn't love that process. For someone listening who may be interested in what you are really actively doing today, how did you start to learn about multifamily homes? And I know from even our in-person conversations that we've had over the years, it does even to me seem like it's just like a big thing to learn about. And one of the things I was excited to dive into today is for people listening, hopefully they can take away something today to be like, how do I like take step one to go learn about
Yeah.
multifamily and getting involved in that and learning from other people. So what would you
Right.
recommend and how did you get started?
So it's funny. So um, I I do raise capital. I have a newsletter out there as well, and I genuinely enjoy educating my peers, whether it's in the tech space, corporate world, guys like yourself who are looking for investment opportunities, of just helping people identify what real estate investment tool is right for me. And I say that because a lot of people get started in, well, you know what, maybe I'll just hold on to my condo and
Mm-hmm.
rent it out. Or maybe I'll buy a two flat, live in one, or you know what, let's go do a short-term Airbnb. I don't
Sure.
know. So many routes out there. And I think for me, again, it goes down to, call it scalability as well as lifestyle design as well. Of how can you, again, get those systems processes in place so that the business continues to operate without necessarily Danny Baylis in there, every hour of every day. So,
Right. Right.
I'd say for when I speak to, people that are looking to get into real estate, they're really, it's four main questions that I like to ask them. It's like, okay, one, how much time do you have? Like, and really be realistic with yourself. Of, if you have a W-2 job, if you have a family, if you have things going on, like, how much time do you genuinely have? So that's kind of question one.
And
Number
if you
two,
don't mind, Danny,
yeah.
that's one thing you and I spend a lot of time talking about. How did you figure out how much time you had?
I mean, it goes down to a little bit of priority, but for me personally, this was extremely important. And for me, I said, if I'm not able to dedicate 20 hours per week between before work, after work, and on weekends, then I don't want it bad enough.
Mm-hmm.
So that was how I think 20 hours a week is enough to get traction. And start to evaluate opportunities, start to see what you like, what you don't like. So that was, that's my rule of thumb. I mean, doesn't mean that that's right or wrong. That's just how I evaluated my time allocation towards it. So,
Love it. Yeah, no, makes
um,
sense. Okay. Sorry, I cut you off. So that was number one.
no,
Number
no, that's
two.
good. So I guess the first one is time. The second one is how, and this is really what I think is super important, how, call it active or passive, do
Sure.
you want to be? And I think when I got started, it was, well, I want to be in control. I want to, be in all parts of the deal. I want to know exactly what's going on. And then when you really start to network, when you really start to understand the business further, really partnerships and sometimes taking a limited role is really uh, a great opportunity to take advantage of.
Mm,
And why do I say that? I say that because as a limited partner in a large multifamily asset, you're actually partnering with very experienced operators where you can learn from those experienced operators, collect income from those operators, and really
right.
just, again, it's a good way to get your feet wet, to create income on a monthly basis that isn't correlated to the stock market, and just learn the business that way. And that's really, when I decided to transition into multifamily, that's how I learned the business. I went
Okay.
out, I spoke to 50 different operators. I said, I'm looking to deploy some capital. I'm really interested in this space. If you have any opportunities where you're looking for investors, please add me to your distribution list. And again, it was kind of like that single family rental or
Yeah.
single family fix and flip. I didn't know exactly what I was doing, but I felt like I had the right team in place to place my capital that would over communicate, that would deliver upon their business plan. And, fast forward, I've done that multiple times now as a limited partner and now transitioning to a general partner. And it's continued to be an income producing investment as well as a wealth of knowledge in learning from experienced operators as
That's
well.
so cool, man, because it's like networking, and before we started recording, no different than talking about, starting something, whether it's, anything. It sounds
Right.
like just getting involved was just talking to people and meeting. So to even dumb that down further, Danny, and to give everyone listening kind of like the very basic explanation, you started networking, and let's just say Bob, one of the guys that you reached out to, I'm assuming what happens is he's leading the project. He's like, hey, we're investing in this 30 30 unit apartment building. It's
Sure.
X dollars. If you want in, here's like
Yep.
the limited amount of investment we would need from you to own X% of the apartment building. Is that kind of how it worked?
At a high level, yes, that's fair. So, really, my main focus right now is what's called a real estate syndication. And what a real estate syndication is there are two parties. There's the general partnership, and they find the deal, they put the deal together, they operate the deal on a daily, monthly basis. And then there's the limited partners. And those limited partners are, hey, guys like myself, guys like you, generally speaking, accredited investors.
Mm-hmm.
Accredited investors are individuals who make over $200,000 a year, who are looking to place capital into a real estate investment, and they don't have any main day-to-day responsibilities.
Okay. So
Some,
you're like an
yep,
angel investor like, I guess in my world that would be like a food or beverage brand getting an angel investment from someone, and they don't do anything day to day, but they gave them however amount of money. They own a piece of the pie, but they don't actually operate the business.
right. And I'd say I've evaluated angel investing in the past, and I'd like kind of this conversation with you. So, what I like about real estate is in most opportunities, you're getting cash flow day one,
Mm-hmm.
and you're also getting the upside of the opportunity once you go and resell or refinance the opportunity. So, my viewpoint on real estate is it is a um, call it a low risk cash flow producing investment versus, in your world, I feel from the outside looking in, it's more of you're hitting a home run or you're kind of striking out or maybe hitting a single. In my world of
100%.
multifamily real estate syndications, you're hitting singles, you're hitting doubles, you're hitting triples, and that's what that's what attracts me about the business is consistent monthly income in a true asset that, generally speaking, is profitable day one.
I I think you hit it right on the head. I think what I've learned already in a couple of years of trying to do a little bit of angel investing is one big difference, and correct me if it's not, if my assumption's not correct with real estate. You get all of the data before you make a real estate investment. So you've talked about building some models. Obviously, I'm a
Yep.
finance guy, that rings bells to me. So you can actually like you don't know for sure, but you can at least
Right.
run some scenarios and get a pretty good sense.
Yep.
With
Yep.
with angel investing, usually the challenge is your due diligence is dependent on the founding team in theory, right? So, if it's a food brand, for example, where are they going to sell it? How much do they make on a product today versus like there's a lot of I would argue there's way more variables that could go
Yep.
right or wrong. And then depending on the economy, some of the lifetime of the investment could be a lot longer in angel investing, right? Like you could be,
Right.
I think a lot of people think it's a quick hit. The ones you hear about maybe are, but I would argue probably most angel investments nowadays are going to be 3 to 10 years. It's a huge window, but like there's just
Yep.
not a lot of success stories with the economy the way it's been the last few years. So I feel like actually more and more people are probably deploying less and less capital. And I was just reading an article the other day in general about investing in different sectors, and it seems like it's become pretty consistent where there's a lot of people holding on to cash versus deploying it into angel investing or any of these other platforms. So, but I think you're right.
Yeah.
It sounds like for real estate, it's definitely more of hitting singles and doubles, and
Yep.
it's more about building a
And I'm
long-term
not saying
consistent
those,
base.
home runs don't, you know, come about, but everyone has their own A, investing philosophy, B, definition of what success looks like. Like mine is to truly buy cash flow producing assets.
Mm-hmm.
And that's exactly what multifamily real estate is to me. And I think, a lot of times it's like, okay, well, sure, let's go buy a multifamily asset. Um, it isn't a whole lot different than picking a stock. Like when you get your reps in, you like stocks for certain reasons, whether it's the brand, whether it's a growth, whether it's a leadership team. There are similarities in that in real estate. I
Oh, I
mean,
bet.
whether it's the
Yeah.
location, whether it's the sponsorship team, whether it's the size, whether it's the upside. So I just say to not overcomplicate things, and obviously the power of a mentorship as well. And I got that as being a limited partner, and now transitioning more so to the general partner side as well.
So to build on that, to
Yep.
become a limited partner, do you need any certifications for people listening? Do you need to pass a test, or do you really just need capital and the right connections to be a part of some of these deals?
Yeah. So again, from a real estate standpoint, it's like, how much time do I have? If your answer is, limited, sub 10 hours a week. Um, do I want to be active or passive? If you're saying, you know what, from a bandwidth standpoint, I'm probably open to being passive and learning this business a little further.
Mm-hmm.
And then the next two questions is, how much capital do I have to deploy, and when do I need that capital back? So those are kind of those four main questions. And in order to be a limited partner, there's some investments you do need to be an accredited investor, but high level, no, it's really finding operators who you trust to find the correct asset to invest into. And generally speaking, what general partners are looking for is they're looking for, 25, 50, or $100,000 capital contribution. It, certainly can be more as well. But if you're just starting out, take a crawl, walk, run approach and throw in a dollar amount that you're comfortable with. And, most real estate syndications have a 5 to 7 year hold period.
Okay.
So I'll kind of give you an example. So my first investment that I invested into was in Arizona. It was 100-unit multifamily opportunity. I threw in $50,000, and how that was structured is I would get an 8% distribution on a monthly basis, and then upon the sale, I split the profits. Myself and the other limited partners split the profits with the general partnership team, and it resulted in around a $95,000 paycheck.
Nice.
So,
and how long was that time?
This one was 4 years. So it was certainly, we had the baseball reference. I guess you could call it more of a triple or a home run.
Yeah.
But generally, what we're looking for when I evaluate opportunities is that 7 to 8% plus monthly cash flow distribution to the limited partners, as well as an opportunity to double your investment over a length of 5 years is really kind of opportunities that that I evaluate both as a general partner as well as a limited partner.
Got it. Okay, so to dig into that a little bit, you said 7 or 8%. Is that just like total rent that was paid a month? You're roughly getting 7 to 8% of that back, or is it you're getting 7 or 8% of the profit back after operating costs, or like how was that math done?
You're getting 7 to 8% of your capital contribution. So let's say,
okay,
Shane, I'm not as good at math of you. You do $100,000 into an investment, you're getting what, approximately $583, $600 a month.
Okay, right.
And again, so it's that helps from, I truly believe in the power of having multiple income streams. And a lot of times we think, how do I get another income stream? And it, equates into kind of more work. The value of being a limited partner is it's an income stream where you're truly a passive investor. So
right.
That's what was initially attractive to me, is increasing my monthly cash flow and income without necessarily increasing my workload.
100%. It's how you really build wealth. So if I'm understanding that correctly, the $50,000 investment, you were getting 7% of that back a month, roughly. Is that?
Yep. Yeah. I mean, some sponsors do a quarterly distribution. Some sponsors do a monthly distribution, but yeah, that's what you can expect back from a monthly return. And
so
then
you basically made back your investment in a year, essentially. Is that right? And then when you sold it, you got an extra. Am I thinking of that correctly?
Doing the math,
yeah.
If you do $100,000 investment, year one, you're going to get $8,000. Year two, another $8,000. Year three.
I thought you were saying by a month, and I'm like, holy smokes! I thought you were saying like you were making $8,000 back a month.
Then we're talking.
I was like, damn, that is okay. That makes a lot more sense to me. Okay, so 8 years, so got it. So it would take you, if there wasn't a sale, it would have taken you roughly 10 years to get back the original investment. But there's obviously
correct,
ideally an exit. like a
Yeah,
business.
yeah. Yeah, there's an exit, there is, forced appreciation, there's paying down the principal of the mortgage, there's
Mm-hmm.
natural appreciation, and all of that equates to generally selling or refinancing in 5 to 6 years, with everyone also getting a large equity paycheck upon that exit of sorts.
Wow, very interesting. Okay, and so that all makes sense. As a limited partner, do you get access to all of the data, I guess is the best way to put it? So like if I'm thinking about getting into a syndicate with you, which by the way, you threw that out there and I didn't mention. I didn't realize that's what this is. So you actually kicked off your own syndicate. You've been talking about this forever. This is awesome.
Yeah. Yep.
Congratulations.
Yep.
That's amazing.
No,
We didn't even
I
cheers on
appreciate
that
it.
this weekend. That's so cool.
Right, right. So yeah, I mean, again, it kind of goes down to finding those right sponsors who you trust,
Yeah.
who will over communicate with you. And I think, again, you know, just like in any business, things are going to go good. There are going to be challenging times. And it's,
Right.
as a limited partner, what I want is I want a sponsor who's going to over communicate with me via, a monthly snapshot of how the asset, of how this business is truly performing. So yeah, and if you're investing with the right general partners, if you're investing with the right sponsors, you are going to get a monthly snapshot of how is my asset performing based on initial projections, and how are we implementing that business plan.
So in layman's terms, probably not too different than like a quarterly earnings release to Wall Street. Same kind of thing.
Sure. I think, yep, very, very strong, analogy there.
Yeah.
Yep.
Okay. And so for you, so again, to put into layman's terms for everyone listening, as you meet these people and the opportunities have arisen, what are some of the things Danny's doing to evaluate? Like, how are you looking at these opportunities? I'm assuming you probably have some sort of model you're looking at or something you've built,
Yep.
or what do you kind of do? What's your process look like?
Yeah. So it's funny how, obviously you just purchased a home, and I'm not going to ask you what your interest rate is, because I don't
I
know
don't
if
even want to talk, I
that's
don't even want to talk about it.
so. It's actually a similar process on the multifamily side.
And
So
that was something I wanted to dive into because I did get some
yeah.
advice while we were going through the process of date the rate and marry the house. So that's what I'm holding on
Okay.
to for now.
All right.
Yeah.
I agree, yet I don't fully agree with that. But hey, so high level, it's goofy. I'm actually, sending out my newsletter tomorrow, and one thing that, if you look at the past 12 months, multifamily transactions are down 50% year over year. I think it's 57% or something like that. And the main reason behind that is really where rates are today, and how challenging it is to make an opportunity pencil out.
Mm-hmm.
So, kind of not like the residential space and the commercial space. There are so many different loan products out there. There's interest only loans, there's floating rate debt loans. So what we're really focusing on is just risk diversion, as well as locking in with a fixed rate loan, which we feel comfortable with, for a period of time. So kind of how we evaluate opportunities for ourselves as well as for our investors is, does the property cash flow at least a little bit day one? I
Okay.
think that is, at the end of the day, this is still a business, and we want to buy cash flow producing businesses.
Sure. Yeah. Yeah.
Second question that we ask ourselves is, how can we improve this asset? Is there a value add play of sorts, to improving the cash flow of this asset? So those are really kind of like, when you're evaluating an apartment building, there is, a numbers approach to it, which is 100% needed, but it's also, call it a business approach to it as well, of like, what is our specific business plan for this specific asset. So
Mm,
I'd say, yeah, when we evaluate opportunities, I mean, it's just like evaluating residential. Like you're looking for something that has some population growth, that is, hey, landlord friendly opportunities, that good schools, and employment growth. And then again, for us at Arc Equity Group, we're looking for, that cash flow day one, as well as a value add component to increase the cash flow, as well as the value of the asset.
got it. Okay. No, I mean, that all makes a ton of sense. So you're evaluating all that stuff. I get it. You kind of have
Yeah,
like a game plan you guys go through. Um, Obviously, the next question in my mind, no different than when you're shopping for a stock. I think most people probably for stocks gravitate towards things they know, products they like, brands
sure.
they hear or love. For you, how do you? There's just, in my opinion, there's an endless amount of opportunity in the real estate world. Like not just in the town you are, the city or
Yep.
the local geography, but you could go around the country. So
Right.
like how do you guys start to evaluate properties and options? And I don't know if it's changed with interest rates, but I would assume things probably popped up and sold pretty quickly. And maybe that slowed down a little bit, but
Yeah. I
how do
mean,
you guys even go down? How do you start to like map that out?
right. So we're very, I guess, cautiously optimistic about some great opportunities arising here in 2024, as some owners are going to be forced to sell, given they're in an interest rate at 3%. Now rates are 6.5, 7%, and that apartment is no longer a cash flow asset. So
Yeah.
I genuinely feel that there are going to be some great buying opportunities in 2024, and our, call it, buy box, so to say, is, and you just kind of, you do learn a little bit by doing. We want to be, give or take, 5 hours from greater Chicagoland. We want 1980s construction and newer. And why we do that is because we feel that your operating costs and having a newer construction build are going to be significantly less than a, call it, 1940s, 1950s, 1960s build. And then really, kind of in that 25 to 150 unit space is where we're actively targeting. And why we target that is we feel it is large enough to have economies of scale, to have systems in place, yet it's also small enough that we aren't necessarily competing against those institutional buyers.
Mm-hmm.
So that's kind of our sweet spot. And high level, like, yeah, I've looked at the Southwest. I've invested in Arizona as a limited partner. I've invested in South Carolina, in North Carolina, in Florida as a limited partner. However, I don't have as much market knowledge of those. That's why I chose to be a limited partner as opposed to a general partner. And second, when you look at the Midwest, and is this, I put my Midwest hat on, it is stable cash flow and consistent year over year rent growth. So maybe we aren't going to get the pops of, like Phoenix, for example. Great.
Sure. Like retirement and
Yeah, yeah. But when you look at the Phoenix market, um, like Indianapolis, where you're from, is actually outpacing rent growth in Indianapolis versus Phoenix. And
oh,
a main reason behind that is there's so much new construction going into some of the Southwest states, like Phoenix and the Sunbelt markets, as well as the Southeast states, and not quite as much new construction in Midwest. So what that means in the Southwest, Southeast states, that supply and demand equilibrium gets off,
mm-hmm.
because again, just the pouring of new construction, where the Midwest, you don't see quite as much new construction going in, and generally correlates to a little bit more of a consistent market analysis as you're trying to acquire a building and hold on to it for 6 years.
Wow, interesting. Okay, I never knew that.
And again, I didn't know that, like it's kind of still going back to that like limited partner versus general partnership. Like I'm very much someone where it's like, no, I could figure it out. I could figure it out.
Yeah, for
But it's
sure.
like you learn this by sometimes being a limited partner, better understanding what general partners are doing. And then, hey, maybe at some point you go transition into being a general partner if that's, what you want to go and do.
Right. No, that makes sense. And it's funny because I actually do know, now that you say that, I have two friends, one of them based out of Texas. And
Okay.
from time to time, I'll get a text from him out of the blue, and he's like, "What do you think of this town?" And I'm like, I like either know it or I pull it up, and it's always like in the general Indiana,
Yeah.
Ohio. And he's in commercial real estate as well, and they're
Okay.
always looking at the Midwest now. And so it's funny you say that, because
Yeah.
I never really put two and two together, but he was always asking me, and I assumed he was just texting people around the country, but I think he is actually actively trying to look to the Midwest. So
Hey, connect us. Would
yeah,
love
I'll say I
to.
definitely will. Yeah, definitely. I didn't even think
Yeah.
about it. We
Yeah.
will.
Right. And then I guess just again, I am very passionate about because just educating others of like call it how do I grow my passive income? And this year, like I said, like transaction volume is significantly lower, so it is harder to go out and buy those opportunities. And it's funny. It's like if someone's like, I have zero passive income,
yeah.
which and I want to get to $1,000, like I don't know, like one I'd say, kind of there are three things. Like one, like go find a high yield savings account. Like Fifth Third Bank right now, they're providing 5.3% on my savings account. So it's
Yeah.
like,
Yeah. It's crazy
okay,
right now there, right?
yeah, and then I have some of my capital in a what's called a debt fund, where debt funds are essentially you're a bank to like fix and flippers, okay?
Oh, okay.
And I get in a 9% monthly distribution.
Okay.
Now there's no upside like there is on multifamily, but I put a dollar amount in and I get a 9% return month over month. And so those are just like
Oh, that's interesting. I've never heard of those
ways.
before. Okay.
Yeah, I mean, as much as I like, it's I think I'm trying to, hey, help others come up with small wins
Yeah.
of,
Love
well,
that.
yeah, I have, money in the stock market, I'm doing well, but again, I'm in sales, a lot of guys in tech sales out there. Well, like, what are you doing on those slower months? Like, how are you growing your passive income when, yeah, you don't have a large sales quarter, large sales month, and helping those kind of go from, whether it's $0 in passive income to a specific amount or growing passive income as well. And I think multifamily is a fantastic, place to be. Yet there are other routes out there as well that are very low risk and fully passive as well.
No, that makes sense. And so I would love to, and we can do some of this off air, but I would love to even
Yeah.
use, as we got 10 minutes left of time, even for a
Yep.
couple minutes here, use me as a use case for you and for someone else that's, I'm sure, listening, that will reach out to you. So
Yep.
let's just say, I've always wanted to get into this space. I've never really known where to start. You and I have had a couple conversations, and I always leave the conversation feeling like, okay, I need to go do some homework. I don't ever go. I feel like I never actually go do enough of the homework because I'm busy enough. And then I look back and then I'm like, shit, I need to go connect with Danny again and figure out how I get involved. So
So that
use
tells
me
me
as a
right.
scenario. Yeah, and then let's chat through that. Like, what would you suggest is a
So
good
okay,
step for me after
you
this?
using you, I'm gonna dissect Shane White.
Love it.
Um, you do well financially, and you really like your job, your company. You have a wife, a son, and call it a growing
Yep.
family in the
Yep. Another one
future.
on the way. Yes, sir.
And you've said, like, I know you enjoy your stocks, you enjoy crypto, and you've said, oh man, when I've spoken to Danny, I really want to do something about it, yet I haven't.
Yeah,
So
100%.
that tells me like, it's, hey, some people, it's that, call it the
And
time and
to maybe not to defend myself, but to be
okay.
honest, I knew we wanted to buy our like second home
Yeah,
within the next,
right.
at that time, probably like 1 to 3 years. So I've
Certainly.
always felt like I'm sitting on the sideline a little bit until we got through
That's
this.
fair.
And that's been
That's
something
fair.
I even talked to my financial advisor about, is like, okay, we did it. Now I want to
Yep.
start, like, because this is the home we hope to be in for a very, very long time. So now I'm like, okay, behind me,
Right.
what do I do?
Yep. Yep. So to me, you call it have more resources than time. Everyone's different. Some people are like, hey, I don't have a whole lot of resources, but I have time. You are kind of on that other end of that spectrum. And if I'm you, like it still goes down to how do I, it's kind of a twofold approach. One, how do I protect myself in investments that are not correlated to the stock market?
Mm-hmm.
I think real estate's a great play right there. Two, I think real estate is a great tool from a tax standpoint as well. For higher income earners, there is certainly great tax benefits associated with multifamily real estate uh, available to limited partners as well. So,
Oh, okay. Didn't know that.
right, right.
So
So,
when
so
you
if
actually
I'm,
allocate capital to a real estate deal, it's tax advantaged in some way, shape, or
yep,
form.
yep. So if I'm Shane White, I'm trying to call it get those wheels in motion of, okay, here's my investment allocation now. How do I broaden my investment allocation? I'm not saying like, all right, get rid of all this stuff. Like I still contribute to the stock market. I still contribute to my 401k, to my, company stock plan. Yet it's also about, I'm not fully, um, that's not where all of my investment is. And I think that's just a good way to look at things of, am I too over allocated in a specific asset class?
Mm-hmm.
And I genuinely feel most, if not all of us, are. We're all heavily invested in stocks and, hey, some people crypto. And a lot of people are, yeah, I know I want to build a real estate portfolio, yet um, they don't know what that looks like.
Yeah.
And a lot of people don't even know what a real estate syndication is. So if I'm you, I would continue to talk with guys like myself. And, there are podcasts out there, books out there that I'm happy to share, but talk with guys who are doing it. Get on some distribution lists when opportunities arise. And then when you see an opportunity, like try and underwrite it to the best of your ability. Talk
Mm.
with the person about their business plan. So I think,
So you mean by like run the numbers yourself and just see what you
yeah,
think?
yeah, just like it truly goes down to evaluating opportunities. And I think it's hey, listening to a podcast is great. Reading a book is great. What is going to far accelerate your knowledge in, is real estate right for me? It's talking with guys who are in the space, and it's evaluating opportunities and seeing, does this make sense for me?
Right.
Do I feel that these are superior returns than the stock market, than crypto? Does this fit with my goals and vision for what I'm trying to accomplish? So
Right. Got it. Like,
I'd
go
say a
do it.
little
Go
bit.
do the work. Go do the work.
Yeah, I
Go
mean,
get in the
hey,
hands dirty.
and it's funny. I talk about this being a limited partner. Being a limited partner still requires work of like being dangerous enough to high level understand real estate,
Yeah.
as well as to kind of get your team in place of people where you're going to evaluate opportunities from. So that would be my kind of challenge to you of just, if you're looking to take the next steps, think about some of those things that I just mentioned.
No, I love that, Danny. Appreciate it, man. Um, as we wind down, let's. I always love to ask these questions, and it'll be fun. I'll have to go back and listen to what you said last time, so I still ask similar questions. The first one is just source of knowledge. So, know that we talked about real estate, but it could be anything. For you, Danny, what pops up in your mind immediately as for all the listeners today, whether it's a podcast, a book, an article, something that you listened to, read that really resonated with you that you'd love to share with the audience?
I'll use this opportunity. So I'm actually I 60 days of reading the Bible every single day, and it is just how much that translates into the rest of my life. So there's an app called the Bible app that I download, find a reading plan. So I'll use that.
Okay.
I probably don't read as much as I could or should, but I feel I have a really strong morning routine, and it starts with that. So I'll start there.
Love it. Okay. Well, that's a good one. There we go.
Yep.
Second one is just tools. And we talked about this at the very beginning of the podcast, but if you want to either say that again and reiterate it or share something new, what tools does Danny use on a daily basis to hit yearly goals, weekly goals, and ultimately just what tools do you surround yourself with to get shit done on a daily basis?
We discussed this right here. So I'd say the full focus planner, and then I really think there's so much power in just having a vision, and I'm getting better at it, but just really kind of challenging yourself. Who do I want to be in 3 years? Am I working backwards to that? And outside of your podcast, I'll also do a shameless plug for Rob Beardek's podcast. It's
okay. Oh, have you been listening to it since we talked about it?
Oh yeah.
Yeah, I mean, great, right?
It's fantastic.
I really am going to try to get him on. I mean, Charlie, who was a guest on here, that's his CMO. So
nice.
I'm working.
That's amazing.
I worked with him at our X Bar. That's how we got connected.
Sweet. That's incredible.
Rob's a savage. Have you been time blocking?
Yes. Every single hour of every day, no.
Yeah.
But more awareness and getting closer to that.
I actually felt like when I was doing it every hour of the day, I started to feel a lot more stress and like I'm behind. So I've kind of done the same thing.
Yeah, I know. Because then sometimes you don't fill it out and it's like, oh man, what did I can relate to
and
that.
Honestly, it's funny. I know Rob, this isn't like super public, but even Charlie talked about it a little bit. Rob is working on like a software that would plug into your calendar that would help with this. So I'm really excited to see what they come up with. Lastly, most important, Danny, plug ARC Equity Group. How can people follow along with you? How can people get on the newsletter? I'll add some links, but give everyone a little download on how they can follow you and get involved.
Feel free to shoot me an email, Danny, DANNY at ARC, ARCEQUITY group.com. Shoot me a text, 630-550-1583.
Whoa.
And I genuinely mean it. Like I love talking about this stuff. So don't feel like, oh, I have no idea what I'm doing. Like, let's chat it up. And I also, if it's not me that, maybe could be of value to you, I'd be happy to, point you in the right direction, as I'm pretty well connected with guys who are active in this space as well. So
love it, brother. Well, thanks for taking the time today, man. I hope everyone listening gets a lot of great lessons from this episode. And Danny definitely will be following up. I have a lot of ideas in this space that I would love to keep learning more from you on. So let's keep talking.
What you're saying is you're going to invest in my next opportunity.
That's what I'm thinking. I mean, yeah, I want to learn more. So cool. Let's do it, brother.
All right,
man.
I
thank you for the
time, Shane, and we'll chat soon.
All right, sounds good, buddy.